Happy Friday, everybody. It's that time of the week. It's time for the Security Token Show, which means we've got the latest and greatest tokenization of real-world asset news for you here on the show. And of course, I'm joined by my co-host, Kyle. I'm Herwig. How is everybody doing? Kyle, how are you? We're back from New York.
Great. Back from New York. That's right. We have been around the block. I was just at the Eat Denver conference a couple weeks ago and wasted no time getting out to New York for the Digital Assets Summit hosted by Blockworks, which was fantastic. There was a lot of institutional demand, so much conversation around tokenization, around stablecoin payments, around real capital markets activities, which personally gets me way more excited than some of the more kind of abstract concepts that we see in the broader crypto ecosystem. So I was pretty gassed up about it, not to mention excited for what comes next with Tokenize This.
Yeah, no, it's now it's the next big thing around the corner. Tokenize This, everybody. The RWA conference of the year for the industry. We hope to see you in New York City next month. But I agree with you, Kyle. Amazing event. I loved seeing tokenization be one of the main absolute themes from many of the presenters. Even Tolly from Solana was like, we always imagined Solana as an RWA chain, right? It's like, yep, that's where we're going to see everybody move towards. And congratulations to them on getting President Trump to once again enforce the Make America the best crypto industry capital in the world here. So with that, Kyle, why don't we get right into our show? Because a lot of these announcements were primed or brought on from Digital Asset Summit. And we've got Brian Anderson from Raze on with us to talk about it. So let's get to it. Brian, what's going on, man? Happy Friday.
Hey, guys. Thanks so much. Good to see you.
Good to see you. We got to see your colleague, Tim, over in New York. And now we get to see you here on the show. So thanks for coming on. Why don't you introduce Raze real quick for anyone who doesn't know you, Brian?
Yeah, thanks. I'm the CEO of Raze. Raze is a tokenization platform and end-to-end service provider for real-world asset deployment on chain. So we're building both a software platform and ecosystem around that for corporations and funds to be able to get these legacy assets on chain and be able to participate in this new world of tokenization. And then we also offer end-to-end services to make that possible. I've been around for a few years now in the industry, in the grind of builders, essentially. And we're so excited about everything that's happening in the industry, which you guys are going to go over. And just the momentum is real. It's real this year.
No, yeah, we can't wait to tap into the wealth of knowledge you have being in the space. So we can get right into it. And Kyle, what a week it was. Brian, actually, before we do, is there anything you can tease us about Raze that's coming up? Any big announcements that we can maybe start off with?
One we're really excited about, and thanks for giving us a quick opportunity to talk about it. But we actually signed a contract with a new customer in December of last year. And it could have been more perfect timing with everything that happened going into January with the momentum of this industry. So Ferox Holdings, I'll give you a little tease here, is essentially a production miner of titanium, iron, and various metals. And they went out seeking for alternative capital sources, and they had their eye on tokenization for years, but they just weren't ready. The market wasn't ready. And then they all of a sudden became ready. And they chose Raze to kind of help do that. So we're launching that next week, actually, in production. Wow. With a full-blown end-to-end. Think of it as a commodity production financing tool. So literally, an investor comes in, stakes their USDT or their stable coin, and then out the other end comes Ferox tokens, FETI 70 tokens. And they get a very short-term redemption and a very nice return on their money. So we'll be able to talk about that here soon. We're going to do some press releases and things like that and announcements. But it's super exciting, and it's real tokenization with real assets.
That's a great use case. I haven't heard that one before, which is, just goes to show you how early we are and also just how many great opportunities might be out there. So I'm excited to learn more about this one. And congratulations, that's huge. Just, goes to show you how quickly you can get to market. You can decide in December that you want to do something, and now you're launching a couple months later, quarter later. I mean, that's how far we've gotten over time, right? So thanks for sharing that. Kyle, any news that you want to start us off with here this week?
Well, Global Settlement has had some cool opportunities to talk with Raze and Brian on some of the stuff they're working on, and we actually really very much love the Ferox deal, and I can't co-sign that one enough. So excited to see that launch, and excited to work closer and closer with you, Brian, over the coming months here. So nothing but good things to say there. But I'm ready to dive into the news, Herwig.
Well, Kyle, there was some pretty cool news that we heard from Cathie Wood, who I would now say is the latest proponent of tokenization, the latest endorsement to join the now extremely growing list of impressive people saying, hey, tokenization is the future, right? The CEOs of the biggest crypto exchanges, the biggest brokerages, the biggest asset managers, and the biggest banks have now all endorsed tokenization. And Cathie Wood is right there with them, saying that she wants to bring funds on chain as well, Kyle. She said, we'd love to be able to tokenize our venture fund, ARCVX, or their digital asset revolution fund, right? So she's also reading the tea leaves. And I wonder if this could be a hint that maybe that they're looking at this, right? What do you think?
Yeah, it's hard to ignore the success that BlackRock has had, and not only the success that BlackRock has had, but we've seen KKR doing some healthcare funds and doing some feeder fund stuff. I think that there is so much liquidity in the crypto industry, so much cash in these treasuries, whether it's in the native tokens or whether it's in stable coins. And a lot of these opportunities are looking for different yield profiles outside of just the traditional treasury product. And that's where I think a lot of these funds are starting to look, is like, man, we can provide 7%. We could provide 8% in our different fund. And that would be a significantly different return profile than what currently exists with some of these yield-bearing stablecoins. Not to mention, I think Cathie Wood is a big investor in Coinbase, as well as in a lot of these different products. So this innovative technology is certainly not something that would scare her or her investment thesis from getting involved here. And so I love it. I think it makes total sense. It will be exciting to see if this actually drives new buy-side demand or if it does not. We did see, like, for example, with that KKR deal, it didn't seem to drive a ton of institutional demand, at least up front. That may change over time, and it certainly does do something in the form of, social proof. But I think that I'd like to see there being, more buy side that comes onto the market as well. It would be fascinating to see if she has any impact in convincing Coinbase to actually endorse a tokenized stock listing. We've seen some kind of proxy style of products, but we've yet to see Coinbase go live. And if ARC has an influence on that, I'd love to see it.
Brian, what are your thoughts on this one?
Yeah, no, I'll just add to that. So I think there's many reasons why people are doing this. I would say right out of the gate, the future proofing and innovation is key here, right? Future proofing, you're leading this. They want to be relevant. They want to remain relevant in the industry. But here's the truth of the matter: global investor access and reach is and Kyle mentioned the buy side, right? That's everything. Like, that's what it's all about. Right. And so, yeah, if you can't prove buy side within a very short period of time, then why did you just do it? Yeah, you save some money. Yeah, you've got cost efficiencies with blockchain. We've heard that story 1,000 times. Right. But at the end of the day, there's a lot of ways to save money in these kind of structures, and doing all the work and the money and the time that it takes to go on chain at this early stage in the industry development is not going to be worth it just to save money. So you got to see the increase of buy-side activity. You've got to see the actual movement, the capital flow on that side of it. Now, what's really interesting, and this is just a little bit of a side commentary, is that think about someone sitting around going, how could I possibly participate in that fund, in that particular fund? very few people have access to that. Even high net worth individuals wouldn't even know how to get access to that, where to start, et cetera. Imagine what it does when it's tokenized. Now, all of a sudden, if they have the ability, they meet the minimum qualifications, right? They're US investor, whatever it is. If they have stable coins sitting in a wallet and they can instantly potentially participate in something that they would never have access to before, bingo, there's the proof right there.
I love it. I absolutely, totally. I think to combine what you guys are saying, right? This is our second shot at, the apple, if you will, where before, we saw a lot of proof of concepts with big names, certainly even, but they never really were a match that, set something off, right? It was always just, oh, great, more efficiency, more people doing this. I think you're right that right now with products like from ARK Invest or coin stock coming directly from Coinbase, those have the chance to once again revitalize and showcase the true, new 0 to 1 potential of tokenization, right? This idea that you can go from stables into a venture fund like that. That's just, leagues ahead. And I can't wait to see that. And that's actually what Bakkt is trying to do. They're trying to beat Coinbase here to the punch. And they've done it, interestingly enough, on Avalanche instead of Base. But they've already tokenized coin stock and the S&P 500. So I think this is very interesting as well, because this is, doing exactly that. It's trying to bring to whether it's retail or even high net worth individuals that, or even international investors in this case, that don't have easy access to stocks like this. Now they can do it on chain. And that is a revolutionary shift. Is this going to do it? Is Bakkt helping make that happen, Kyle? What do you think?
Look, this is what we've been waiting for. I remember we were calling out the FTX versions of tokenized stocks back in the day. But I had a chance to meet with Rodrigo, the co-founder of Bakkt, and I'm impressed with the product that they've built. And so this is now coming to Avalanche. They can port this across to different blockchains. It'd be interesting to see how the regulatory component last year. I actually talked to somebody that has done some work within the New York financial services, as well as worked with the OCC a little bit. And he actually posed some interesting ideas around if you could consider this a stable coin, not because it's a stable to $1, but it's stable to a share. And if that has different legal complexity than if it's actually, considered as a security. I don't know, there was some weird stuff in there, but there is a lot of regulatory gray area right now, and no one seems to have kind of a clear answer on it. What that means in practice is that this may actually have broader distribution than what we're expecting or what you might expect. So I like this a lot. I think we need it in the blockchain space because, as we talked about, Herwig, part of me feels like some of the crypto market has matured to a point where we need to bring in some other styles of offerings in order to drive this market forward. Yeah,
absolutely. Brian?
I'll just add one thing, piggybacking on what you just said about needing more offers. It's exactly right. The crypto community has been primarily focused on investing in almost nearly every token backed by nothing. Just simply market demand, buy side, sell side, right? You start bringing in real offers like what we're doing with our customer. You start bringing in real offers, and you can use your crypto, you can use your actual tokens to be able to participate in more traditional looking but tokenized offerings. It's going to bring explosive liquidity in.
Yeah, I can't wait to see that. It's happening in front of our eyes. In another approach, Hamilton Lane, they've been trying to meet that customer downstream, if you will, trying to go and meet the retail demand for as little as $500. You hear that a lot with crowdfunding and with tokenization. Well, this time it's with Republic. And that's a pretty big deal given Republic's reputation and customer audience. So going back to your earlier point, guys, about, testing the market, this is as good as it gets right here, in my opinion. We're talking about an incredible issuer that has their private equity fund that's not normally available to folks like this that are on Republic. And they can invest a very small amount to even see if the exposure is worth it. So I'm going to be very glued to this one, if you will, to see if this is a model that many other companies will start to follow or not in a similar regard. Brian, let's stick to you on this one, since you seem to be a big fan of this trend of, opening it up.
No, I'm a huge fan. I commend those guys for what they're doing, primarily because, like you said, I mean, they're very regulated, right? They have everything to lose because of the licensing and the work that they've done for many years. So anything that Republic is doing and driving into is really going to help our industry as long as it's done right? And they have adoption, but I think it's powerful. And I can't remember the exact stats on this. You guys may know more about this, but if you go back and you look like 10, 15, 20 years, the average minimum investment into private equity, into a fund, et cetera, was so significantly high. It was like $500,000, $1 million, $5 million. Actually, I think it was more like $1 million to $5 million or something like that, right? It's minimum. And over the years, it's continuously been driven down to now you can participate as little as like 25K, right? Well, now if they pull this off, you're talking about potentially minimums of participating in these larger, sophisticated funds that are meant for a different class of investors as little as $500. To me, that's mind-blowing, the innovation that's actually occurred and what's opened up. So yeah, that's what I'll say.
Yeah, totally agree. Kyle?
Yeah, it's interesting. One of the things that I found fascinating about this deal is they actually are planning or building into the product that it might be illiquid on the secondary market. So there is actually no trading of this product on a day-to-day or month-to-month perspective. It's actually they have redemption windows. So I think that it looks to be every quarter you have the ability to sell those shares. And so we'll see if that's a buyback mechanism to Hamilton Lane, or if that is a inevitable listing on a secondary market and you have a particular tranche or there's a certain amount. It's unclear to me how that sell function works, but this is going to be kind of a novel mechanism. Some may see this as a negative because you're making it putting more restrictions on selling. You could also look at it the other way and say that by actually trying to focus some of that liquidity, there will be particular event points where this sell pressure may be concentrated, which then you can line up buyers to purchase that or for the fund to redeem it itself. This is really where I'm going to be watching to see the success of this product in particular, and how that liquidity either adds additional value by creating redemption windows that investors can successfully get out, or is this just unnecessary restrictions? Only time will tell.
I'm a fan of the idea. I think we've seen the industry shift towards this model, seeing that the first couple of years, first 5 years, really the entire time to this day, right? Liquidity doesn't exist on secondary markets. We just don't have the marketplace depth yet for these products. And so we've seen other products like BUIDL and many of the sort of yield coins start to say, hey, we're going to partner up with folks like Zero Hash and use USDC to enable liquidity and redemptions, as opposed to secondary trading of the units themselves, right? So I think this is great, given that, when it comes to retail investors, liquidity is even more important sometimes, right? And so the idea that they can at least potentially have a window of time to get out versus relying on a secondary market where there may never come a buyer, that's, I think, a better shot at creating that liquidity. So I think it's a great approach, and I think we're going to continue to see that kind of happen in the industry. Another thing we might continue to see happen in the industry is more blockchains, whether L1s or L2s. Brian, I don't know if you're planning on launching one, but Securitize and Athena just did. So we saw on Monday, actually, Kyle and I were there at their event in New York City, where they announced between Athena and Securitize the Converge blockchain. Okay, Converge being focused on tokenized assets and DeFi, actually having a lot of DeFi applications focused on retail out the gate, they say, to be like Ethereal, Morpho, Maple, Pendle, and Aave Labs' Horizon project, apparently. So they've definitely sort of already saying, okay, we're going to focus on this sort of yield RWA part of finance in DeFi. But they definitely are acknowledging the fact that this is also meant to be an institutional grade blockchain, and saying that they're going to bring in tokenized assets. Athena already has 6 billion in their ecosystem, Securitize around 2 billion in their ecosystem that they've tokenized. So you can imagine that's already a large kind of combination that they plan to start to kind of migrate, or in the future launch new RWAs, presumably from Securitize, on this platform, right? And they're using Layer 0 and Wormhole for interoperability, and Redstone and PIF on the Oracle side of things. And yeah, it looks like you're gonna, probably leverage these, I'm guessing, the Securitize ID and sort of KYC ecosystem to now create this, I wouldn't say walled garden, since I'm sure we'll be able to see a lot of this activity or all the activity on chain, but it definitely is a new platform, a new ecosystem to bridge DeFi to RWAs and tokenized assets. It looks like that seems to be the main theme, where say something like Ondo's new chain was more focused on, being a back off, a back office, if you will, to tokenize stocks specifically. So love to hear both of your guys' thoughts, especially Kyle, since you're sort of, in this space directly with global settlement, and Brian, is this something that you'll potentially have to work with? Is this something you'd look to integrate to? I have many questions for you guys.
Kyle,
well, I can lead it off. I want to commend Securitize. I mean, they've been in the industry as long as anybody, and I think has done a really nice job of integrating with all sorts of DeFi solutions. So they have all their regulations in terms of the ATS and the broker dealer and the transfer agent. They've obviously onboarded some of these massive funds and institutional partners. And yet we see quite a few announcements of them partnering with Wormhole, them partnering with Redstone, them partnering with Athena. I think it's really cool. And we certainly had experience with that when we worked with them on our crowdfunding campaign. And we really wanted to make sure that it was MetaMask enabled and that you could participate using USDC. We collaborated with Avalanche in that process, and they were very forward focused on that and helped us work through some of those complexities even at the time. And so I think it's really wonderful, because it does seem in a lot of ways that many of the crypto native firms just don't have the expertise here. And that's okay. They're not necessarily expected to, but it is a Dunning-Kruger thing where you may not know what you don't know. And bringing in some of the adults in the room that have the perspectives, that have been having the conversations directly with these large firms, I think is going to be crucial in driving adoption, because so many of these DeFi and more crypto-focused firms, they have hundreds of millions of dollars or potentially billions in aggregate of TVL, of staked value, of real float that we could be monetizing, we could be using in these protocols. We could be generating real returns with that money for these types of investors and really driving the growth of the crypto industry. But it requires partnerships like this. So I definitely want to read more into the white paper of how this layer one works. I haven't had a chance to, since we've been boots on the ground in New York all week. But But I think it's a good thing. I think you're going to see more and more layer one blockchains, because it really is not efficient from a technical capacity if you're going to move things either cross chain or between different private networks to take it off of the blockchain. It almost makes more sense to kind of have your own intermediary layer. And so I think that you're going to see more and more of these types of solutions anyway, which is a wonderful thing.
So you think that it's not enough is enough? You think there's going to be plenty more L1s of this type to come to market?
I wouldn't be shocked. No.
Brian, what about you? What do you think on that?
Yeah, there's a lot of interesting points here. So from a tech perspective, I think we're going to see, I'm almost positive Avalanche said this number, they were projecting it was going to be like over 1,000 L1s that were going to be launched on the Avalanche chain, because they've now made it so easy, right, to be able to launch your own chain. I think that's a really important kind of data point to kind of talk about here. Really what we're talking about is we're going to call them L1s, but we're still building across the same kind of several different infrastructures, 90% of them being EVM compatible, right? And so really what you're seeing from a technology perspective is you're seeing companies like BlackRock and others go, there's some things missing here with natively using some of the chains that are currently there. Let's build on top of what they have, but we have to have usability as the primary concern here. UX is so critical, right? And we know what we struggle with on the tech side still. Cost control, things like gas fees, et cetera. And then number 3 is going to be controlling compliance. Can we control this? Can we manage it? Or are we completely dependent on some blockchain foundation where you can't even get a hold of, I mean, you guys are going to laugh at this, but there's no support, right? You can't like call up support like you can Oracle or Salesforce or Amazon Web Services and get help, right? As an enterprise, it's a real issue. It's a real problem, right? And so I think companies like this are smart because they're like, look, we got to have those 3 things in check: usability, cost controls, and control and compliance. But I don't think you're going to see as many of these launch more serving the mid-market. I think those are going to serve like the non-institutional mid-market private kind of deployments. They're just going to leverage what exists, right? So I think we always have to remember BlackRock and really, or should I say Securitize is really going to be focused on serving the larger institutional asset classes. And for them, it just makes sense. They got to build their own stuff.
Yeah, I think that's a fantastic insight, Brian. We're going to end it there. We've got more news to cover, but with that, we also have some more updates from the RWA Foundation and more of the show to go on. So, Brian, thank you for coming on. We hope to have you again on very, very soon, and we'll be keeping our eyes on that Ferox launch next week.
Awesome. Thank you so much. Can't wait to be at you guys' Tokenize this.
What's going on, everybody? It's time for the weekly update from the RWA Foundation. For those of you who don't know about that, that's our latest initiative to bring together the industry of all the largest L1s, L2s, tokenization engines, marketplaces, DeFi solutions, rating agencies, everything else in between, all in one place so we can help advance the industry forward, starting with the Wally DAO, so we can create a token-based ecosystem targeting crypto natives to bring them together, to educate them on RWAs, as well as give them perks and benefits to tap into the RWA ecosystem on chain and even get exposure via airdrops to many of these new native tokens that are tied to these technologies. So if you're interested in that, you can learn more about our white paper at RWAF.xyz on the Wally DAO on the RWA Foundation. In the meantime, you're going to have to sit tight. I can't announce anything once again this week other than we've officially picked a chain. So that means TGE can only be so far away. But since I've got nothing more to give you, I can give you just a little bit more of Wally. So let's run it. Maybe tune in next week for another bit more to the story. And with that, let's get on with the show, starting with a quick promo for Tokenize This. What a week, Kyle. What a week of news. It was crazy for us up in New York, nonstop, which means my inbox is piled the heck up. I'm sure yours is too. And there's so much news to cover. I've just been trying to dig in and research all on the plane last night, this morning. There is so much to talk about. So, Kyle, we're going to try something new this week, I think, for the Token Debrief. I'm just going to start going through the articles. And when there's something that you got some great insider commentary on, just stop me. How's that sound?
Sure. Let's do it, Herwig.
Well, I think the biggest news that actually we didn't get a chance to see, I would love to see that billboard that they put up in Times Square announcing the winners of the Grand Prix by Spark. This is the $1 billion Treasury allocation that has been announced last year that had dozens of yield coins applied to say, hey, pick our basically Treasury T-bill backed products. And looks like we've got 3 winners, Kyle. Not shockingly, in my opinion, the biggest winner is BlackRock's BIDL fund on Securitize, receiving $500 million, 50% of the total allocation. We also saw Superstate come in with second place for $300 million allocation to their USTBL product. And finally, Centrifuge's JTRSY, their Janus Henderson T-bill product, powered by Anemoy as well, is set to receive the remaining $200 million. So great move. Janus Henderson and Centrifuge, I think working out there, getting them an allocation. So that's a total of $1 billion, Kyle. Any comments there?
In here. The first thing is that you might ask, where is this $1 billion coming from? And that's actually in from the Treasury, from the Sky protocol, which is the rebranded MakerDAO. If you're familiar, they have the DAI stablecoin, DAI stablecoin, which has been one of the larger programmatic stablecoins for so long. And now they're pretty much fully backed by treasuries. And they are going to continue to do that by deploying money into these T-bill protocols. This is exactly what we were talking about with Brian earlier in the show. There is billions and billions of dollars of staked assets in these protocol treasuries that can flow into these types of platforms. And we're starting with treasuries, but I wouldn't be surprised to see in the future if they expand into private credit, or if they expand into other types of investment offerings, potentially even real estate in the future, to get higher yields. Because even if you're talking 1%, 2%, 3% higher yield on $1 billion, that's a lot of money in someone's inevitable pocket. On top of that, it's important to mention here, like we just covered that BlackRock's BIDL fund hit that $1 billion mark. That was only a couple weeks ago. And now they added 500 million additional funds into the Treasury. And so that is a significant increase and a huge win for everybody in the tokenized Treasury space. We're really starting to see this type of product grow. I think it's nearing the 5 billion total mark of tokenized Treasury products. We're going to get there very, very soon. So this is a huge win for the teams involved. I think Centrifuge being the third winner here is fantastic. I haven't heard quite as much press and coverage and adoption from this product as compared to the BIDL fund or compared to the Superstate fund. So I think it's an awesome win for the Centrifuge team, who really went out hard in the Digital Asset Summit and through some great events.
I think it's awesome. $1 billion, Kyle. And like you said, I agree. It's just the beginning, right? I believe in on-chain reserves for foundations, for stable coins, for DAOs. This is the future. And I see many, many more billions being allocated this year and next year to these product types. So I'm excited to just watch this category grow and grow and grow this year, Kyle. What I'm interested also in seeing is a new category come to market, and signaled by this backing of Van Eck Ventures, very legit, of course, being part of the Van Eck group. They're investing, co-investing in Manifest. Okay, this is a pre-seed round for an issuer tokenizing real estate ETFs. Okay, so we've already seen some publicly registered money market funds, right, like Benji, come on chain. Why not real estate ETFs, right? Moving on, I guess, DTCC is joining the ERC 3643 Association for their permission tokenized security standard, right? That's a pretty big deal given, of course, they are the largest clearinghouse. They did 3 quadrillion in trades, I think, 2023. Okay, so the fact that they're endorsing this permission security standard, EVM compatible standard here, I think is a pretty big deal. Bitfinex also getting in the game, the yield coin game. With now enabling monthly subscriptions and redemptions for NexBridge's USTBL. So we're going to start to see more and more demand, I think, go through there. And speaking of demand for the US dollar, I think the UK might be getting a little jealous. They're now ramping up their Digit token project, aka tokenizing gilts, and they're asking for proposals now. Falcon X, I think, is doing something pretty cool. They're launching a structured credit facility. RWA offering. This facility transforms institutional lending by packaging Falcon X originated loans into a structured product that now investors can access through a private credit vault.
I think this one, Herwig, is pretty important. As we've talked about with Treasury bills providing this quote unquote risk-free yield, as we would say in economics. Obviously, it's not totally risk-free, but generally would be considered risk-free due to the faith of the US dollar. And it's certainly at least the faith in inflation as opposed to credit risk. But I think that you're going to see this translate into other competitive products in the future. And so the more we see private credit issuers, this is by far the largest and hottest sector in, large institutional investment capacities these days. We're seeing private credit everywhere. I think that as this market continues to reach its maturity, as it begins to saturate, crypto and the digital asset space will be a potential outlet for some of these fund managers that want to expand their AUM. And as I said, I think that there's going to be plenty of underlying treasuries that see opportunity to make a few extra percentage points on a private credit fund versus the treasury fund. It's such an important step to take the treasury of a protocol and invest it into a regulated fund product, even if it's a treasuries fund product. The jump from investing in a regulated fund product into a different regulated fund product is much, much smaller than just doing the initial jump to getting it into that regulated space. And so I really see private credit as the next burgeoning industry for a lot of these underlying treasuries, and is going to be a huge sector and segment in the tokenized asset industry. Potentially it will surpass the treasury fund product sector in a relatively short time frame.
If last year's trend was yield coins or T-bills, treasuries, et cetera, I think it's safe to say, Kyle, you're right. This year, private credit is really making a mark. We saw the launch of the Apollo's a cred token earlier in the beginning of the year. We saw Invesco launch their private credit funds on DigiFT. I think it was last week or a couple of weeks ago. It's getting very, very real. Good stuff on Falcon X there. I love it. And also good on Brickken here, showing off the multi-chain RWA and capabilities world, or I guess in this case, for their tokenization platform, they can now expand the capability of deploying on Polygon. So they were, of course, pretty popular choice for BNB chain as well. Now they can support Polygon-based issuances. So I'm excited to see their ecosystem continue to grow with more different chains, if you will. Korea is testing out tokenized deposits with 100,000 people in April next month. 7 banks participating in their CBDC trial. So Asia continuing to kind of lead the embrace of CBDCs, it looks like, especially with this trial. No small test case, I think. Uranium Digital is raising $6.1 million for their platform that's Solana powered. And that's 6 million raised for, they call it tokenized yellow cake trading. But of course, uranium is now a hot tokenization asset. This is not the first use case of uranium being tokenized. So now that market is officially growing. Australia has also proposed a regulatory structure with a focus on RWAs and CBDCs, perhaps something American politicians and regulators can look at. We'll have to dive into that a little bit more. Particular also came out with yet another rating. They continue to do amazing ratings. And this time signing an AA- rating to the BMN2 issuance. This is Blockstream's mining note, round 2, because of their successful round 1. And that's a pretty strong rating. You'll have to go check out that amazing report by Particular. Nomura Research Institute is also testing tokenized bonds using on-chain deposits, more specifically showing off that true native on-chain settlement from deposit to bonds. And I think that's a natural evolution that we're going to see in the market there. Worth mentioning also, Dubai Lands Department is kicking off a real estate tokenization pilot, saying that they're expecting about 16 billion in tokenized real estate by 2033. Last week, we saw actually T0 officially complete their T0 tokenization. So, of course, we know that they've hosted many digitally enhanced offerings, but now they're truly natively tokenized. We've got the Ethereum contract. You can find it on stm.co. T0 is officially on chain, folks.
I love this one. Just before you close it out, Herwig, on the last one, which I may also have some thoughts on before we close out the show. T0, major shout out to their team just because of how dedicated they've been in this mission. But if you don't know, or if you don't remember, T0 actually has a huge backer in the ICE, the Intercontinental Exchange, which owns the New York Stock Exchange. So I think that T0, having completed this process of being able to offer the entire capital markets stack on chain using blockchain tokenization, I think is a tremendous win for them as they begin to work with some of these more established Wall Street players on bringing tokenized products to market. They've always felt that they needed to control the entire ecosystem and life cycle of the asset. And it looks like 7-8 years later, they may have actually figured out how to do just that. So major shout out to T0 for getting all those things done. And hopefully now that a lot of this stuff is done, you can have that sort of out of the box solution where you can do this rinse and repeat over and over again.
Yeah, no, I completely agree with that. And that's, it just goes to show you how difficult. I like to say that T0 is kind of fortunately a product of their times, which is when the regulators were very uneducated on this topic. We're talking about the early teens, the previous decade that they started this process, right? So they were stuck educating and dealing with an existing infrastructure as opposed to taking advantage of, say, a blank slate, brand new BD with better language. So they've had to do a lot of work. They own multiple BDs now, I believe. So they have done a lot of work to get to this stage, and now they're set for hopefully amazing growth. We're seeing a lot of activity and a vocal, supporter out of Marcus Lemonis and trying to bring Bed Bath & Beyond, I think, onto T0. So lots of cool stuff maybe happening there. We're definitely going to keep our eye on. But last but not least, Kyle, we also saw Oro announcing a $1.5 million. This is the second or third funding announcement this week for a pre-seed for gold tokenization, once again on Solana, led by 468 Capital. Once again, also proving that gold is another one of those, I think, key commodities being tokenized this year. Kyle?
Yeah, I'm a big fan of tokenizing commodities. We've talked about it 1,000 times here on the show, both in terms of accounting for any liquidity discounts. Well, you can just redeem it for the underlying and sell the actual underlying because you have a useful asset. So I think that that's very helpful in building liquidity for real world assets that can eventually trickle and translate into the broader ecosystem. But also here, there's kind of a natural fit due to the fact that there's just a supply chain component here. And being able to layer in the supply chain components and tracking the legitimacy and fidelity of the asset over time with its price and with a lot of these components, bringing both the quantitative and qualitative information together into one token, one piece of metadata that then gets traded around the world is really, really cool. And it's going to save a lot of time, effort, energy, and at the end of the day, cost in making this happen. So major shout out to Oro for doing all that stuff.
Well, don't go anywhere, folks. We've got one last segment of the show where Kyle and I now have to pick a company of the week. It's that time of the week, Kyle.
Oh, yeah, it is. It is the Companies of the Week segment. Last but not least, this is the best segment in all of blockchain tokenization. Anything you've ever heard in media led up to this specific point, which is where Herwig and I pick two companies that we particularly want to highlight for doing something really novel in the space or innovative or exciting. It could be in size. It could be an impact. It could just be an interesting or novelty. It could be anything in between, but Herwig and I wanted to give that spotlight to two particular companies, which obviously, as we talk about every show, does nominate you for the Company of the Year award at the end of the year that we've done 5-6 years running now. So I think that that's pretty fantastic. Herwig, I'm so happy to be here. It's been an awesome show. We have had so many choices this week, but you can only pick one. So I want to hear who your choice was for episode.
It was tough, man. There was, as you said, a lot of choices. And a lot of good choices, not just a lot of like fluff like we talked about in the past, couple of partnerships here and there. No, all meaningful news headlines this week, Kyle. So I had to really search deep inside and say, like, what's a really driving fact? Because this isn't, an AI choice for us. This isn't, it's by TVL or by a certain metric. This is purely what we decide by the heart that we think deserves the biggest spotlight. In my opinion, Kyle, I think that spotlight should go to Hamilton Lane, okay? Because what they're doing with Republic, and shout out to Republic as well, of course, but what they're doing by bringing private equity to retail like this for as little as $500 shows you the democratization of finance, the trend to going towards retail, the ability to lower cost to funds down to as little as $500, the ability to leverage these redemption capabilities and create liquidity. All of it is being demonstrated here by Hamilton Lane. And I wish this offering, honestly, the utmost success only because of the fact that it will also show many other asset managers a similar path to bringing their product suite to retail for as little as $500 as well. So I think this is awesome news. Hamilton Lane, you're my company of the week.
I think it's a great choice, Herwig. Hamilton Lane has been a stalwart in the industry, driving some of these amazing things forward, and now democratizing the opportunity through Republic, who has had such a great track record in the space as well. Makes total sense. I think it's a great winner.
I'm not the only one who gets to pick one, though, Kyle, so hit us. Who you got?
Well, my company of the week this week has just completed their new fundraise that has been led by Van Eck Ventures. And my winner is Manifest. Manifest is the company that's bringing home equity investments through a tokenized ETF. The ticker is USH for US housing. But their goal here is to bring ETF style of products into the tokenization space, specifically starting with real estate. And Herwig, I think that we've seen in the public markets that passive investment products or kind of these managed fund products like ETFs or mutual funds have dominated the investment spectrum. I really do believe that the average retail investor doesn't really want to have to think through which type of product they invest in. They may like real estate and they want to invest in real estate as an asset class, as opposed to looking at a particular loan or a particular property or I think that the average person just wants to participate in the ecosystem. So launching tokenized ETFs, I believe, has always been a huge opportunity in the security token industry. Not to mention on the home equity side, Figure has done such a successful job in launching these types of products. It shows that the market does want home equity investment products, that whether the actual homeowner wants it or that the market wants to invest in those things. So I think launching an ETF backed by these types of products is both a great underlying asset and a great financial structuring for what the market, I believe, will want. So for all of those reasons, on top of the fact that they were able to secure a really great name lead investor, Manifest is my winner of Company of the Week, episode 277.
They're going to manifest their way into hundreds of billions of AUM, Kyle. That's what I'm seeing. Great choice. Real estate, I am so bullish on. Some people have knocked it. They think it's a trend that tried and died, if you will. But nope. This is just the beginning, and Manifest is showing that real estate is going to be opened up through ETF access too. There's so much demand across this entire asset class. Can't wait to see this come to market. As you said, says a lot with FanEck Ventures coming in as a backer. But that's the show, everybody. That's all we've got for you this week. We are less than a month away from Tokenize This. So start getting your travel plans ready. Get that ticket if you haven't already, and get ready to set up amazing, amazing meetings for 3 days straight if you're planning to stay the whole time. An amazing workshop on day 3. And of course, great panels and keynotes and all kinds of insights that we're going to learn on day 1 and 2 over at Tokenize This. So in the meantime, check out stm.co for all your latest trading news. We got the yield coin charts up. We, of course, have a lot of great, incredible research for you to go check out, and more on STM TV on our YouTube if you're curious. Kyle, any closing thoughts?
Hey, I'm just happy to be here every week. Major shout out to Security Token Market and everybody behind making this show possible and throwing the event in New York, which is going to be fantastic. Check out stm.co for more information.
Well, everybody, enjoy your weekend and happy tokenizing.